been trying to make sense of this whole story, but every video I watched that talked about it used language that was clearly meant for people who know a lot about crypto trading and financial markets, but I don't. And a lot of us out here don't really understand these things. So I took the time to peel every aspect of the story down to its most basic concepts so I could break it down for you as simply as possible. So let's start. This is Sam Bankman-Fried. He goes by SBF. We're going to call him that from now on. Okay, so he founded two companies, Alameda Research and FTX. Now, what did each of these companies do? They both invested or traded or bought and sold crypto. Now, crypto is a whole ecosystem, and I don't have time to delve into all of that. When most people hear the word crypto, they think about crypto coins or cryptocurrencies. And as most of you know, the difference between cryptocurrency and, say, a US dollar is that cryptocurrencies are not backed by any one government or any established bank. And I know that's a very simple explanation, but basically that's what cryptocurrency is. But in the world of crypto, whenever you hear crypto, you're not just talking about cryptocurrencies. You also have to include other, like tokens, NFTs, the program or the software where all these things exist and are exchanged on. All of that is part of the crypto universe. And for this story, what you need to understand is that both companies, Alameda Research and FTX, were trading in all of it. Okay, so what is the difference between Alameda Research and FTX? These two companies that are both owned by SBF. Alameda was a hedge fund type of company, and FTX was an exchange. Don't worry, I'm going to explain what those things are. Let's start with the exchange. An exchange is basically what it sounds like. It's an exchange. You give me your money, and then I will exchange it for either, in this case, crypto of any form. If it was a stock exchange, you give me your cash and I buy the stocks, and then I'll hold it for you until you're ready to sell it. Hopefully, you will sell it when the value goes up. That way you make a profit. Say, for example, if you bought Bitcoin, which is the most famous cryptocurrency, and you pay $100 for it, and then in 5 years is now worth $1,000. When you sell it, you've made a profit of $900. That's the ideal situation when you're dealing with an exchange. It's very simple. We take your money, we buy what you want us to buy, and we hold it for you until you're ready to sell it. Now, a hedge fund is kind of like that, but it's different in that when you give me your money, you trust me to move it around and buy and sell different things, because what I'm trying to do is get more money for you. A simple exchange is a safer bet because you know what you're buying. You sort of expect to go up in value based on what you have studied and seen, historical analysis of the market. You expect certain things to go up in value. So you buy it and you hold on to it. And then when it goes up in value, say years, decades later, then you sell it for a profit. It's a safer bet. It gives you back a kind of a low profit, but it is steady. It's something you can count on. It's something that you know you're not going to waste your money on. You're not going to lose your money. You are betting on something that's safe. When it comes to hedge funds, though, you are hoping that the person in charge of your money will move your money around so that they can guarantee as much as possible that you're going to make a lot of money. Something that a simple exchange can't guarantee because it's a very safe bet. So it guarantees that you're going to make a lower amount of money, but you're pretty much sure that you're going to make money. With a hedge fund, you are playing Russian roulette. You really don't know if you're going to make money or lose money. You're betting that you are going to be making money because you trust that the person who's handling your funds knows what they're doing, they understand the market, and they're going to only put your money on things that are riskier, but that they're guaranteed to bring a lot of money back into your pocket. Now, to be honest, because crypto is such a new market, I don't know how a simple exchange would be safer, because unlike the stock market, we have more than 100 years of seeing how stocks move, and there are companies in the stock market that have been there for many decades, more than 100 years. And so in a traditional stock market exchange, you have historical data that can guarantee that, okay, we know that this company is very steady. They continue to do this much in returns every year. So you'll be safer putting your money there. In crypto, like I said, because this is new and it's a very volatile market, this is all new technology, I don't know how an exchange is better than a hedge fund. If I'm going to risk all that money in the crypto market, I might as well put it in the hedge fund. It's a gamble either way. But if you're going to try to maximize my investment to the highest degree, that's where I'll put my money. But again, I'm just like you. I'm an amateur. I'm trying to learn this whole thing. According to the research I did, when people put money in a crypto exchange, it is a safer bet than putting it in a hedge fund. So if you were going to be looking at these two companies owned by this guy, one is FTX, which is the exchange, the safer alternative. The other one is Alameda, which is the hedge fund, the riskier one. If you're somebody who doesn't want to take on too much risk, you would put your money in FTX, the exchange, the safer alternative. But if you are interested in taking a little risk because you want to make more money, and this is money that you can afford to burn, then you put it in Alameda, because they're really playing hardcore with your money and you're betting that they're going to get the maximum return. Now, to make things even more interesting, FTX, the exchange, decided to put into the market a token called FTT. This is a token. It's not a crypto coin that you can use to buy something. If you have Bitcoin, you can buy a car with Bitcoin. You can buy a pizza with Bitcoin because it is a coin. It's a form of currency. Well, FTT is not a currency. It's not a coin. It's what is called a token. A token holds its value based on what people want to pay you in exchange for taking that thing off your hands. You can exchange a token for a coin, but the token itself is not the coin. Okay. Maybe you didn't need to hear all of that, but I just wanted to make it clear. And what SBF was telling his clients from FTX, all these letters, is that, hey, I have this token. If you put money in this token, it will increase in value, because as our company FTX grows in value, the value of the token goes up. We put it out into the market, more people want it, it increases in value. But in the case that nobody wants to buy your token, your FTT token, we, FTX, we guarantee that we will buy it from you. So you're never going to find yourself just holding this thing that nobody wants. We will pay and we will buy it from you. So it makes it safer. Say, for example, you buy a piece of land. You don't plan to build a house on the piece of land. You just buy this piece of land in this location because you have a feeling that this area, it's going to increase in value. Property values are going to increase. And so you just buy the piece of land, hoping that in a couple of years or in a couple of months, depending on how long you plan to hold on to it, it's going to increase in value. And when the time comes that you're ready to sell because the price has gone up, you sell your piece of land, you make some extra money. That's what this FTT was supposed to be like. So to be clear, we have two separate companies. We have FTX, which is an exchange. They also offer this token called FTT. And then you have Alameda Research, which is a hedge fund. It's a little riskier. Now, FTX became huge in the market. SBF invested a lot of money in advertising. He had some really big celebrities endorsing this exchange, encouraging people to buy crypto through this exchange. He had Gisele Bundchen and Tom Brady appearing in a Super Bowl ad. They had people like Naomi Osaka to endorse it, to join the company as somebody who promotes the company. Steph Curry was another one of the celebrity endorsers. So this was really big, and it started growing, and people started joining this company and, giving them money so that they could invest their money in crypto. And also people were investing in the FTT token that the company was offering. So the company blew up in a very short period of time. That's FTX, right? On the other hand, you have Alameda, which is growing in its own right. It is this huge behemoth. Why? Because as the economy starts to slow down and people aren't investing so much in crypto and other exchanges started to struggle, Alameda started offering, hey, listen, I will loan you money so you can continue doing your operations, but let's use the crypto holdings that you have as collateral. So if you can't pay me back the money that I loaned you, I get to hold on to all these crypto investments that your clients made, and now they're my clients, and I have all this crypto in my books. And so on the one side, you have FTX, the company that is, the sexy celebrity endorsed company. It's growing in its own right. And then Alameda is growing on the other side, buying up all these smaller exchanges that are struggling in the economy and swallowing up a large portion of the crypto market. So much so that FTX and Alameda became the number 2 exchange companies in the entire crypto market. There was only one company that was more successful or was holding more crypto than those two, and that was Binance. Binance was a company that was owned by, let me get this name straight, Changpeng Zhao. He goes by CZ. All these people, they go by their initials. But CZ used to be friends with SBF. And when SBF was starting FTX, CZ gave him about 20% of the money he needed to start the company. So he owned about 20% of FTX. Eventually, as FTX got bigger, they bought back the 20% ownership that CZ owned in the company. And the way they paid CZ back is in FTT, the token. They say, listen, instead of giving you cash, why don't I give you this token for the amount of money that I owe you? And as the token increases in value, you'll be making more money. So CZ says, sure, of course, I'll take it. So they gave him the equivalent of $2 billion in FTT tokens. And so everything is going well, right? But as CZ is watching FTX and Alameda growing and taking up all these big chunks of the market, CZ is starting to feel some kind of way. He's starting to feel like, hey, you're kind of encroaching in my territory. What's going on here? Not only is FTX getting all these endorsements from celebrities, SBF, he started to donate to political campaigns. I think he gave Joe Biden $5 million. He gave the Democrats a bunch of money. He's also given Republicans a bunch of money. So he's hedging his bets. He's just making sure that he has friends in high places. So when the United States finally starts looking into crypto and investing in crypto, and there's some rumors that some of the major banks here in the US and even the Fed is looking into expanding into crypto, he's trying to make sure that he's friends with all these people so that when they're getting ready to go into the crypto market, he'll be the guy that they'll be calling. And CZ doesn't like that at all. He doesn't like that at all. He's like, nah. You're starting to take up too much space. And if you now are friends with people in the government, you're going to try to, mess with my operation over here. You're probably trying to get me out of the market so that you can have the whole thing for yourself. So CZ is watching all of this, and he's just watching. He's watching and waiting for his opportunity. Now, here's where things start to get interesting. And by interesting, I mean illegal. What a lot of people don't know is that all these risky bets that Alameda is making, it's not making a lot of money. they're actually losing money. And all their cash reserves that they're getting from all the clients who are investing money in them are going down, down, down. And they're starting to run into trouble. So what do they decide to do? And by they, I mean SBF. What does he decide to do? He starts moving money from FTX clients who have invested into the safer alternative of investing in crypto. He starts taking money from that account and putting it in Alameda. Now, he's not just taking the cash. Remember, he created this token called FTT. So what he's doing is when people give him money to invest in FTT, he takes all those FTT tokens and is putting them in the books at Alameda. And then Alameda goes to the banks and say, hey, can I borrow some money? Look at all the money I have in FTT in my books. I'm good for it, right? You can trust me. So, if you lend me money, you can use these as collateral. So you're not going to lose your money. And let me continue investing for my clients with this borrowed money. And the bank said, bet, sure, let's do this. So billions of dollars. They're going into the market being reckless and they're losing money. And this is happening over time for a total of, I think I heard $10 billion of money that was transferred from one company into the riskier company without the clients knowing what's happening. But then one day at a Zoom meeting, the CEO of FTX, her name is, what's her name? What's this girl's name? Caroline Ellison, who got the job of CEO because she was SBF's girlfriend. That's how she got, seriously, you can't make this up. And I'm going to invite you to read the more scandalous parts of this story. I'm not going to waste any time on that. But child, it was a mess. Those companies were being run by kids, really young people who had no experience, but because they had been dating each other and they were all sleeping with each other, they were just giving each other jobs, and they were running these billions of dollars in trades. All these trades that are going wrong, they're being done by these kids, these inexperienced kids. But anyway, let's go back to the Zoom call. In a Zoom call, the CEO of FTX, her name is Caroline or Carolyn, it slipped out of her mouth that some money from clients of FTX has been moved over to Alameda to help them out in their operations. This is illegal. You can't do this. This is against the law. You certainly cannot do it without the knowledge of the clients, but especially because you are moving from an exchange to a hedge fund, that's not allowed. But it slipped out of her mouth, and now the cat is out of the bag. In addition to this, there seems to be some infighting among the kids. The kids are fighting within the company. And so somebody called a reporter, let them know what's happening. And an article comes out in CoinDesk, it's one of these crypto blogs that talks about the crypto industry. And word gets out of what's happening, about the shift of money from the FTX clients into the Alameda books. But the thing that came out in the article that was really scandalous is that not only was SBF transferring these tokens from FTX over to Alameda, he was issuing new FTT tokens to Alameda. Tokens that had not been purchased by anybody, just tokens that he had created, and he was putting it in the books over at Alameda. And you know what? He could do that because these tokens, he invented them. So he didn't have to wait for them to have actual value by people buying them. No, he could create ones out of thin air and be like, here, these tokens are worth this much because I say so. And the banks believed them, and they were giving them all these billions of dollars, which were being wasted in risky, foolish gambling moves. And this is the problem that I talked about in the video where I was talking about how all these billionaires, they're not really as rich as we think. Why? Because most of their net worth is based on stock prices. And what is really stock? What is stock after all? Stock is nothing more than speculation and manipulation. If you really boil it down to that, You don't have to have actual value, an actual asset, an actual thing in your hands that have actual value to give the stock that value. No, you just have to imagine what it's going to do. And based on manipulating the books, you can give anything, any value you want. So all of this comes out, the industry is chattering, and it had a ripple effect in the industry. But you know who's listening? You know who's paying attention? That's right. Our man CZ, he goes, aha, gotcha. And he decided then to put out a tweet that pretty much broke the internet or broke the crypto market, where he's saying, remember those $2 billion worth of FTT that SBF gave me? I'm dumping them. These things are worthless and I'm just gonna dump them into the market. You know what that's going to do? It's going to bring down the price of that token. This guy is dumping $2 billion worth of it, and anybody who has cash can just buy it. If I offer $5 for it and he says, yeah, sure, I'll take it, the value goes down. And from that moment on, the value of Alameda went down, the value of FTX went down. And because FTX and Alameda were holding so much crypto in their books, now that their value is going down, guess what's happening to all these crypto coins, all these crypto tokens that are being exchanged through these companies? All of their value is going down. And now a company, FTX, that at its height was valued at $32 billion, it is now worthless. FTX and Alameda both filed for bankruptcy, and now they're worthless. And billions of dollars in holdings, people who had put their money in these tokens, these FTT tokens that they were hoping were going to increase in value, they're now worthless. I mean, they're still floating around. I'm not really sure what the current value is. If I find it, I'm going to put it here. The entire crypto market suffered because of this one guy who owned these two companies and decided to be reckless with these companies and with people's money. The entire market is now suffering. Bitcoin is down, Ethereum is down. All these crypto coins that were pretty solid, because these two companies was holding so much of them, their values are now going down. I just hope that this whole collapse teaches us a valuable lesson. We need to stop just trusting these people because there's some celebrities who say, oh yeah, this person is cool, he's with me. This guy, this SBF dude, I mean, look at him. I don't want to, shame him for the way he looks or anything. But this man used to walk around looking like this, disheveled like this, walking in just, regular frumpy clothes, walking into meetings. I hear there was a meeting by Zoom where he was talking to some investors, asking for money. And while they were in the meeting, this dude was playing video games. And people thought that was so cool. And they wrote him a check for over $120 million because they thought this guy is so cool that he's not even stopping his video game to talk to us. Oh my gosh. We need to stop falling for the charisma of these people. Although I have to say, can you imagine, and somebody tweeted this, can you imagine a woman walking into a meeting trying to get funding dressed like this and walking out with a check for over $100 million? Must be nice. Must be real nice. Yeah, anyway, this is the thing I've been talking about, and I'm going to continue talking about this. I'm going to continue making videos about how we put so much value on personalities. We just see somebody with a personality that we like and we think they're cool, and we see them hanging out with other famous people and politicians, and we say, yeah, I can trust this person. Based on what? Based on what? Be smart out there. Don't let these people swindle you. Try to find out as much as you can. Ask as many questions. Before you hand money to somebody, ask as many questions as possible. I had to really dig deep, and maybe I haven't done a perfect job explaining this, but I like to understand things from the bottom up. I need to know the roots of things. And if you ask somebody to explain something to you in as simple terms as possible, and they can't make it simple for you, then that means they don't understand it. And if they don't understand it, why would you give them your money? People have to be able to explain to you what they're doing with your investment, with your money, as if they're explaining it to an 8-year-old. If they can't do that, don't trust them with your money. Okay? Well, thank you so much for watching this video. I hope you enjoyed it. I hope you learned something. Did I do a good job? Did you understand what I was saying? If somebody watches this video, did I explain something wrong? Clarify in the comments below. I want to continue studying this topic. Like I've said in videos past, I find the crypto market to be very interesting, and I want to learn as much as possible. I learned a lot just researching for this video. And so I want to continue doing videos talking about this, talking about how money is made and spent and swindled in the market, and making it as simple as possible. If you'd like to see that, please subscribe to my channel. Give a like to this video if you liked it. Like I said, leave a comment. And I will see you in the next video. Bye.